It's a very simple framing. In different ways also, they're kind of both not great investments.
All valuation basically has nothing to do with a company did in the past, but everything about what it's going to do in the future, which is uncomfortable.
You can love a company and hate the stock. That's not contradictory, or vice versa. You can hate a company and love the stock, and often that can be quite a dangerous situation to be in.
So I found this tweet surprising coming from him, because essentially what he did was he posted SpaceX's numbers in a chart which contains all of one day.
For an advertising-free version of this show, check out wallstreetwildlife.com.
Welcome to the Deep Investing Jungle with your hosts Luke the Badger Hallard and Krzysztof the Monkey Piekarski. On this week's show, yet again, we're continuing our King of the Jungle review with a bull and bear debate on another 2 companies today. I know we keep saying 4 and it's too ambitious. Like, these are big conversations, so we're doing 2. We're definitely doing 2. We are going to talk about Sphere, which is a Krzysztof holding, and I'm going to look at a bit of a beaten down holding in my own portfolio, Novo Nordisk. And just for disclosure, we're recording this episode on the 13th of June, and you guys are not listening to this on YouTube until the 28th of June. So sorry for the gap, but we've both got some vacation coming up, so we're trying to get a couple of conversations in the hopper. In fact, just to open the conversation, Krzysztof, where are you going to be on the 28th? When this goes out?
On the 28th, I'm going to be right back here in Sicily. But in the interim, I'm going back to my homeland for a surprise 50th birthday for my uncle. And to that effect, so because it's a surprise, they rented out a nice restaurant and it's a family dinner, I'm going to show up with the fake nose and mustache. See if anyone notices.
Is that a Polish tradition?
No,
like
it's a monkey tradition.
Okay. Well, I remember the first time you were like dressed as a monkey, so I guess that's your MO.
That's right. And the second time you met me, I dressed up as a proper Vegas high roller.
Yeah, well, you didn't dress up as you were a Vegas high roller.
Exactly. And you, my friend, are going to be where?
I will be probably waking up with a hangover in San Sebastian on like day 2 of a motorcycle tour down to, so we'll be in like the mountains in northern Spain, and we'll be in the Pyrenees for like a week. And then, yeah, I'm keeping it open-ended. It's like the beauty of having a flexible life and a flexible podcast co-host and wife.
So flexible.
Yeah.
I'm practically a gold medal gymnast.
So I keep the trip open-ended. As long as I've got enough episodes recorded, then I'm kind of golden. I can come back at my leisure in July. Yeah.
So a couple of notes on that, Badge. One, San Sebastian is where I think I've had the best tapas of my life. I don't know if, have you been?
Not yet, no. I've heard great things.
Oh my God, I am so jealous. We need photos, because what you're going to find is you walk into these street shops, one after another have these tapas lined up as though it was like a painting. I mean, just exquisite. So I can't wait for you to enjoy that and have me live vicariously through you. And 2, for those of you that are clever to the date, it is a Saturday the 13th, which means that we're working hard for you all, for you listeners, on a weekend. And by I was going to say it's voluntary, but it's not voluntary. You're cracking the whip, and I have to. What choice do I have?
I'm beating the drum, and you're like rowing like a lunatic, and you have got. I love the little tweet you've dropped into our show notes to open today's conversation, because yesterday, I know for you guys on YouTube, it was like it's super old news, but yesterday was SpaceX IPO day.
Yeah, so. Let me say a little something about this. I tweeted earlier this morning. This is in response to Oguz Erkin. I'm not sure if I'm pronouncing that right, but he's a Substacker and an investor, and I follow his work for some time, and I think he's highly skilled. So no disrespect. Follow him if you want. good deep dives into companies. So I found this tweet surprising coming from him because essentially what he did was he posted SpaceX's numbers in a chart which exists, which contains all of one day. And then next to that, he juxtaposed Meta Platforms. And he said, essentially, called out SpaceX, 18 billion of revenue, negative 10 billion net income, valued at 2.2 trillion. Meta, 215 billion revenue, 70 billion net income, valued at 1 trillion, 1.5 trillion approximately. Question within the tweet was to some extent, like, make this make sense, right? Which you see all the time, right? Though, and how did I answer? I mean, you said you liked the tweet, so I don't know if you like my answer or just the tweet.
No, your answer's good. Your answer's good. Like, you said, essentially, the market is forward-looking, so, and that's like on the nose. Right. Like, if we think about these two companies and kind of where they are, I know they're both like trillion-dollar companies, but I think you can make a strong argument that Meta is like mature, well-established. Does it have like a lot of growth ahead of it? I don't know. Like, it's already got like billions of monthly active users on most of its platforms. It's probably, it's probably within 30 or 40% of its like terminal growth. Whereas SpaceX, like, I mean, I don't sound like a lunatic, but literally, like, its TAM could be quadrillions of dollars, right? In a very, very long term.
Quadrillions of dollars. No, but that's the point. That's the point that we don't know. We don't know. So if I could unpack this a little more, and here's a bias. I think we share this bias, actually, Badge, if I'm not mistaken. We don't like Meta, net, because I think it has been the cause of much social harm. I see it very, very clearly up close with my young college students. In short, the addictive, programmable, turning young people into addicts by design piece of it. And there is this thing that I see being talked about that in response to that, there is a young generational wave that is flipping Meta the bird, symbolically or literally, and saying, no, we don't want to be part of that anymore. And I believe, I don't follow Meta closely, but I believe the growth rate has actually, to some extent, dipped. Quarter over quarter or whatever. Don't quote me on this. I hope I'm not wrong, but it's certainly not, accelerating versus, again, who knows what SpaceX is going to deliver. So I just found it slightly surprising that a skilled analyst like this would say something like he did, which I guess to me is like it's difficult to maybe really believe that the market is forward looking or like really, really accept that all valuation basically has nothing to do with a company did in the past, but everything about what it's going to do in the future, which is uncomfortable.
I mean, to be fair to, I don't follow this chat, but ogres, but it's just engagement bait a little bit. And he's saying something we all kind of acknowledge, but it is nice to see like the two charts alongside each other. It does remind us of what it means to be a growth investor. I mean, like the things that we are focused on, which are, as you said, all forward looking. The past is not that relevant.
Right. I mean, it is true, though to counter argue myself, the vast financial difference at the moment is truly vast. I mean, one company is losing billions, the other is making billions. And Zuck, to his defense, I believe he is plowing it into as much AI stuff as he can. So I don't think he's like a, ancient mariner, like completely disconnected with where the future is going. And maybe he will be right. Maybe maybe this is a crazy valuation gap that isn't defensible. We'll see. But the point still stands.
So anyway, I guess we're still talking about SpaceX. Like at the time this episode goes out, it is old news. I think options are tradable from Tuesday, like the 16th, whatever, 16th, 17th. Have you come up with your plan yet? How are you going to navigate it?
I actually can't make a plan because I need to see what the IV is, right? And I need to see the technicals of what the options are showing. And my intuition is the options will be very, very expensive. And so that's the first question, right? Is do I want to buy an option, but the market makers are already figuring out the implied volatility. So what's my edge there? Flip side would be, do I want to sell an option? But with a name like SpaceX, first you probably need to have enough underlying shares, or I would think of selling a put, but that would be basically no different than buying 100 shares potentially. So I'm left with more of I'm not sure. I'm not sure if this is the time to play.
I think we'll revisit this when we're actually back live and like chatting near real time, and we'll see how we both navigated it.
But it is exciting though. It's an exciting company. I'm looking forward to seeing how it all unfolds.
Should we get into our King of the Jungle stocks for this week?
Sure, Badge. Should I go first with a little continuity from last episode, since I promised the people I would talk about Sphere, and then we didn't, and so here we are. So if, in case you missed last episode, I did say I felt a little bad about not talking more about Sphere because it was in my personal portfolio after having done the Safari session some time back. It never made it into my King of the Jungle portfolio for who knows what reason. It was probably an oversight on my part. C'est la vie, but maybe better late than never. And I know you have a bearish take on this, so we'll see. So here we go. Sphere is that giant glowing eyeball that you might have seen overlooking Las Vegas that has actually learned to print money, and the money is coming in pretty darn fast. So it's actually technically two businesses tied together. You have the Sphere, that giant LED dome on the Vegas Strip, that sells and owns immersive films, book concerts, music residencies, and rents that world's largest, fanciest screen to advertisers. So that's part one. And it also has a legacy business, cable business, MSG Networks, which is home to the New York Rangers and the New York Knicks, which interestingly, the New York Knicks are in the NBA Finals. So a good time for that, but that still won't make much of a difference, because that fading cables business is the reason we got a good discount on Sphere to begin with. So this is a company essentially that spent $2.3 billion to build this giant glowing eyeball in the middle of the desert. And for a while, right, when you have so much capital expenditure, investors were looking at it as though it were a giant money pit. The proof in the pudding is that with the Wizard of Oz film, about which we've talked about plenty during our Vegas sojourn, they saw that that people were willing to pay a lot of money to see this show, to enjoy the spectacle, and things flipped. So it went from burning cash to making it from an adjusted operating income of negative 19.7 million in 2024 to positive 144 million in 2025. And this is really, this is the story in as simple a graphic as I can make it. You could see the revenue bars in blue pretty much going up to the right, but it's that swing of the purple. Like, can this thing make money? For investors, that's the bottom line. And you could see how quickly it went from pretty serious negative numbers to positive income. The other thing to know about this investment when I was looking at it is that at the time it was a special situation in that the debt from the legacy cable business on the income sheet was very much clouding the numbers, because we know the cable business is a dying one, but they had all this debt. And so it looked like Sphere might actually go belly up, bankrupt. But fancy financing engineering took place. The company basically split in two, more or less, and the debt was no longer, Sphere was no longer liable for the debt side of the legacy cable business. So it became basically its own thing. Once that happened, all eyes were on, can Sphere actually make money due to demand? And so that has happened. Maybe we'll talk about this in the back and forth, but we loved the experience of The Wizard of Oz, so we know there's a there, right? Now, basically, in terms of should you buy Sphere now, the investment thesis more or less resides on the question, can they replicate both hit movies or shows? Like, is The Wizard of Oz just a lightning in a bottle kind of thing? Or can they do it again with other draws that just fill the seats all the time? That's question one. And question two really is, can they replicate this business model in other places? With a sidebar, exactly what are the financial details, the financial economics, because we know that the next one is going to be built in Abu Dhabi, but that's not actually going to happen till 2029, and the finances have not yet fully been disclosed. The bet is that, not the bet, but it's meant to be understood that Sphere itself won't be capitalizing the build out. They're basically going to be franchising the model. And so should you buy this at today's prices? Well, so side note, this is again where I think technical analysis came in handy for me. You can see, looking at this chart, that the price for a couple of years during the build out had this resistance line around $49 or so, that every time the price reached that point, the sellers would come in and say, okay, this is pretty lofty, we're no longer interested. And then something funky happened around the time that Monkey bought. In fact, Monkey bought because this happened. It's called the breakout, meaning that the price all of a sudden surpassed that resistance. And from there, it's basically been nothing but up. I mean, it has been a really skyrocket-ish price gain since September of 25. So that makes Sphere at this moment quite pricey, and it's baking in quite a lot of assumptions. So very quickly, I want to say that the bear case is Wizard of Oz basically starts to fade, and Sphere finds that replicating these, that it was more of the lightning in the bottle situation. Vegas is a one of a kind, but you can't really do it anywhere else. That would be bear case, and stock drops quite precipitously from here. The base case around these prices, currently about $150 per share, says, yeah, content stays the same. Operating income continues to grow about 35%. The Abu Dhabi build-out stays on schedule. The profit is decent. And it's kind of fairly valued, if those are your assumptions. The bull case, why you would continue holding, as I am, is that a second/third/fourth hit happens, that the financing details are very lucrative, and that it is easier to franchise this thing than the bears might say. So that option to move forward with many more of these becomes basically the business model. So I guess I'll end this should you buy Sphere segment with, I feel like I got a little lucky, I don't know if I was good or lucky, but I was following the story. The breakout in price told me go. And then when we went to see it live, I left very, very impressed. I genuinely felt like this is a unique kind of experience. And I immediately thought, my God, I would pay a lot of money to see one of my favorite bands take advantage of the technology. And so I'm thinking a lot of other bands / artists are thinking in exactly the same way. And I see a bright future for this company.
I thought it was amazing as an experience. The Wizard of Oz blew my mind. How engaging and engrossing. You go to like a full IMAX, which are huge, like a proper full IMAX. There aren't many in the world. They're so tall. And if you see like a great movie, like a Christopher Nolan movie or something, where they really take advantage of that format, it is like mind-blowingly big. The Sphere is like that squared. It's like so incredible.
Remember, actually, speaking of the technology, remember we were debating, you and I, whether what we were seeing, it was like an image of like speakers hanging down, right? And we couldn't tell whether they were generally speakers hanging down or whether that was a projection. And it turned out, right, that was a projection.
It was cool little sort of trick where it looked like, maybe they had some clanky infrastructure, but it wasn't really there. It was like projected. And like it works so well in Las Vegas because like Las Vegas is just like this horror show of like lights and, insanity. And it's one of the few locations in the world where this really lands. Sphere Group, or whatever they are, Sphere Incorporated, Sphere Entertainment, they tried to launch another Sphere in London. I don't know if you sort of followed that news, maybe like a year ago, 2 years ago. And it got kicked back by our mayor for like a bunch of reasons. But, even London, which is, one of the world's most incredible cities, and we had like a location that was, you would think was kind of good for it. Like it's where the Olympic Park in Stratford. There's a lot of, there's a lot of, it's like an regenerated entertainment part of London. And I was quite excited about the idea of the Sphere coming. It got kicked back and I was kind of annoyed because I wanted that to be nearby, but it kind of makes sense. Like the light pollution is just insane, right? And I gather, having done a little bit of research on the company, like their advertising model, the fact that they sell like ad space on the outside of the Sphere, the exosphere, that's pretty crucial to the business model and like the economics. So even if you were to dim that or turn it off outside certain hours, like you could materially impact the profitability of like a Sphere. So it just didn't work in London and it would probably never happen. And like Abu Dhabi, I can kind of see, and maybe like a Dubai, somewhere like that, and maybe like one or two China locations where, frankly, like the people don't have a lot of say over the shit that gets like parked, like landed in their backyard. But this is my kind of challenge. Like, how many locations are there, like a Vegas and Abu Dhabi, and maybe like a Shanghai or somewhere, where you could put one of these things and it would actually, it would sort of fit and it would make sense and it'd be profitable. I don't think there are many locations like that where it makes sense.
Yeah, no, that's great pushback. They are experimenting with a mini version in National Harbor in Maryland, which I think would cut in half, let's say, the pollution or the overall size. And I want to initially say, like, you're right, but you can't please all the people all the time. And there will always, but the planet's pretty big. And sometimes, I don't know if this is right, because you're right, it's the advertising model and it's a special kind of experience, but it is true also that many people go deliberately to a particular place to experience a particular attraction. So from other places, it might be the opposite, like not the NIMBY, but let's build it so that we could grow around this thing. Who knows, right? There's bizarre people. People are funny creatures. They will go to the middle of the desert to have an experience. So I think your point is right in that it won't work everywhere, but does it need to? And is the planet big enough to support? I don't know. The market would just want, 10, 20?
Let's loop this back to your tweet at the top of today's episode, right? It's all forward looking and it's all about future growth. If the end game, let's be like let's be like bullish about the company. Like maybe the end game is 4 full-size spheres in the world and, I don't know, 10 or 20 mini spheres, like the model, the National Harbour model. Like at some point you've built those and you've kind of scaled into it, and then like you got nowhere else to grow because these things just are, they're difficult, environmentally difficult to make work. And the economics depend on the advertising. The economics depend on like the city part funding it, subsidizing the build to some extent. So what have you got then? You've got like this sort of real estate company is what Sphere kind of becomes, where it part funds the build of these mini spheres in a few locations where it can get permission, which I imagine is like a long drawn out painful process. It has to secure investment from like the local city to make that work. But there is like an end game. It's not like IMAXs where, you could have thousands of these things.
I agree with that take. So said that way, I would frame this as an investment that is very sensitive to the momentum in the early side of the curve. And probably if things go well and things go well in the desert and they get thumbs up around the economics and the price goes up, re-rates even higher, I probably would exit, assuming that all the good news is already built in.
That's good.
So,
So I think that's well played, right? You're I guess you're on like a three bagger now if you bought like $50 and it's now $150. So well played. And if you're, as long as you've got an eye to the exit from this investment, then yeah, good job.
Yeah, it worked well. It worked well. I wouldn't be, I think for our listeners, I wouldn't be chomping at the bit here unless there's some sort of correction.
So to be clear, and like the question you always ask me, like, would you buy Sphere today?
No, and that's like in the context of my portfolio. There's too many other companies that I think are undervalued, and here I'd be trying to squeeze the juice out of the lemon, which might give me another 25%. That's fine, but I don't think I would buy it here. I'd wait for a pullback.
Okay.
Yep.
I think we agree. I'd love to have one of these, like, accessible in the UK, because it was an incredible experience. People should have a chance to experience that.
Yeah. Now, one thing there's so many details that we leave out from these quick pitches, but it is fascinating that the revenue model that, the projections on the Sphere is a main source of revenue, but they're playing around with that. And they recently had a kind of instant win game where people, kind of like a lottery, could use, like, they project things onto the Sphere, and it's more of a game than it is an ad. And I think there will be lots of other optionalities based around creative ways of making use of this giant technological marvel. And I don't think they've squeezed all of those. But that's sort of tertiary to the main points that we're making, right?
That was Sphere. Let us know what you think about that one in the YouTube comments.
So yes, ticker symbol SPHR. Oh, one more. Sorry, one more thing. When things were looking bearish for the stock badge, that's because interestingly, the first film they were showing on repeat was called Postcards from the Edge, which was a kind of beautifully shot nature documentary, but the message was like humans are killing the planet with global warming stuff. So the repeats, I think many people left that show kind of like, wow, that was amazing to see, and not really a good feeling about the damages. That's why Wizard of Oz was such a huge revival of the idea. What the next big planned show about, like the daily show on repeat's going to be?
No.
It will revolve around extreme sports. So they've been filming, athletes probably skiers, doing insane things. And that's what you'll experience in the, on the majestic screen. Oh my God, how amazing will that show be? Back again in Vegas next year. Well, it's going to open.
It's going to open
late.
Maybe Warsaw will get a mini sphere before we get there in 27.
All right, that's enough for me about Sphere. Why don't you tell us about something pretty much identical to Sphere, Novo Nordisk?
Yeah, that's very, definitely much less interesting. And before, let me preface this a bit, because I am a Novo Nordisk shareholder, and I bought into, it's rare I do this actually, like buying into like a beaten down company that is unarguably like second fiddle. I like to own the winners, and if I can get a winner at like a beaten down valuation, fantastic. But this is not a winner. This is like a company that's made some severe missteps. But when I bought in, like my view was the valuation was so cheap because there's so much pessimism around the company. I thought it was a good buy. And I was happy to own like the second best company. Well, let me tell you about Novo Nordisk. Maybe I wasn't pessimistic enough because it isn't playing out well as an investment. They're a 100-year-old Danish drug company, and they used to be famous for one thing, just making insulin for diabetics. And then maybe like 8 years ago, they discovered something that changed everything. And it was a diabetes drug called semaglutide. And they noticed that patients who were taking this diabetes drug were losing weight. And so they kind of pivoted, rebranded, started selling semaglutide as Ozempic, which we've all heard of now. And, now like many, many millions of people around the world are losing huge amounts of weight. And that's a good thing. Like, I know my wife is a bit skeptical about weight loss drugs, but if you just look at like the net harm of being like clinically obese or severely overweight, that correlates with so many bad health outcomes. If you need a bit of help to lose that weight and then get to a point in your life that you can get in the gym and you can go out like walking and start to exercise and start to feel like proud of yourself again, like that's like the turning point for a lot of people who struggled with diets and different things. So I think this is a good drug. I think this is a very good drug. So it's a two-sided market. You've got, like, in the last 3 years, you've got Novo Nordisk and then their American rival, Eli Lilly. And essentially, like, they're splitting, they're sharing the market down the middle. And it's a very lucrative duopoly. Novo Nordisk stock, like, tripled. Lilly's stock quadrupled in that period. And at one point, they were both, like, in the top 10 most valuable companies in the world. But it started going wrong for Novo Nordisk. And there's a lot of sort of complicated reasons. The company made a lot of mistakes in terms of its ability to scale out. I think the CEO from that period is no longer with the company. They've turned a lot of corners at the point where I became an investor. And they were really kind of getting ahead of production for their latest version of the drugs, which are in pill form. So rather than having like a monthly injection, take a daily pill and get almost the same kind of weight loss benefits. But Lilly have a pill as well. So kind of where are we now, right? Let's do a sort of top-down view. So Lilly's drug is called Mounjaro for diabetes and Zepbound for weight loss. And Novo Nordisk have Ozempic and Wegovy. And where the market split is now is broadly like 60-40 in Eli Lilly's favor. Novo tried to leapfrog them with a drug called CagriSema. And in February this year, there was a head-to-head trial. CagriSema unfortunately lost. The stock dropped. Novo's stock dropped about 15% in a day. It raised $100 billion in market cap. And that set of drugs that Novo had been pinning their future on were confirmed as worse than Lilly's current product, let alone like the stuff that Eli Lilly have in the pipeline. There has been a silver lining in the last week. Well, maybe the last month by the time you guys catch this episode. in a different clinical trial, CagriSema works better than expected in diabetes. So there is like a commercial opportunity for this, but it is like a second tier drug for weight loss compared to what Lilly have. And Lilly have got other drugs in the pipeline, like retatrutide and amycretin. I'm feeling a bit like Krzysztof, like going down, I'm not a biotech guy, and I'm having to like come up with all these, code words for these things. This is not like my happy place as an investor. So where are we? Like the US is the biggest market for both of these companies. Novo has made efforts to try and get ahead of production, build like a pipeline to be able to get the drugs, the pills out, the injections out. But there is this competitive pressure, and they are a Danish company, not an American company. The Trump administration is pushing down drug prices, which is a good thing for consumers, for patients. But Novo Nordisk are struggling there because Lilly has like a better deal essentially as a domestic company with domestic, even though they both have US production. So Novo Nordisk has just taken a bit of a pounding, down like 45% over the last year. But now here's like the potential bull case, because I think I would still buy this company today, notwithstanding like the fact that it makes my brain melt a bit. Understanding like the pipeline and the comparison of the drugs. Like today, if you just look at the numbers, today Novo Nordisk is trading at around 10 times earnings, and Eli Lilly is trading at around 40 times earnings. So Novo's pretty cheap for, still like one of the world's biggest pharmaceutical companies. It's also doing like a lot of buybacks. It's like $2.3 billion worth of buybacks this year. It's made a lot of 9,000 job cuts to try and be more efficient, cut costs. It's like 11% of the global workforce. That is substantial. So, the bull and the bear case are kind of the same thing. Like you're buying a beaten down, cheap company today that probably is always going to play second place to Eli Lilly. But maybe that is reflected in the valuation because it's like essentially like a quarter of the valuation of Eli Lilly on a price to earnings basis. So yeah, and then this is, ultimately this is a massive market. It is still quite early. Like there's a lot of people I think would take these drugs if they were available, like easily accessible, if the costs were right, and the costs are coming down. So like the growth potential here is still enormous.
Badge, can I offer two comments here?
Please.
One is that even though I like my biotech, there are some that I still put in the too hard pile. Not because I don't think I could understand the basic thesis you outlined, but because I guess I can't with any confidence predict the inner dynamics of drug regulatory pressures and politics and government. This has to do with patents and patent infringements and all kinds of stuff that I know I don't know enough about. So I don't think I could sleep well simply on saying, oh, this looks like a cheap value, right? Which is classically called a bear trap, or value trap rather. Two, this is interesting. As you were talking, I had not looked at the Novo chart in a while since we talked about it some months ago when I was explaining some technical analysis stuff using Novo as an example. Curiously, what's great about the platform I use is that the drawings stay. So I saw the lines I had made months ago. And curious, at the time we were talking about, I drew a yellow line, which was a support line way, way below where the price was, with a blue arrow that pointed right to that line. And it's interesting that after the bad news you talked about broke, we went exactly to that line, but a couple of weeks forward, and now have since bounced off that line based on the slightly good news that you're talking about now. So, but my overall point is, if you're looking at this chart, that is a very, very steep downward slope. And so from my technical view, unless you had an edge on the market, you would not buy this because the market is still selling.
Yeah, and I can tie that big drop back to the narrative where one of their key drugs was found to be not as efficacious as was hoped compared to their competitor. So I agree. Like this is kind of a beaten down, tough holding in my portfolio right now.
Why would you not sell it?
Because it is really cheap, and because it's one of the few dividend paying stocks in my portfolio, and I'm trying to build up my dividend portfolio. So it kind of, I find it hard to find dividend growth stocks that I actually enjoy the story of. I find them all really very tedious because they're so boring, mature, income paying companies.
Oh no! Wait, I hope our friends over at I hope they're not listening.
So I've got one in the portfolio. It's kind of counterproductive to that portfolio strategy, to cut it from the portfolio when it is so cheap. Like a lot of the bad news is still baked in. But yeah, like this is definitely on my, personally on my kind of chopping block. Like I should. If it wasn't for the dividend and a bigger strategy, I probably would be just getting out because it's become complex.
I think that is an interesting question we could maybe come back to in a future episode, because I imagine your thinking is very logical. It sounds logical, right? It's it's a value. You're not buying it for growth, but the dividends are secure and they more than make up for it. I imagine the people in the dividend world are like, yeah, that's how we do things. But obviously, if the price keeps dropping, that's a fallacy. It's kind of like you say to me regarding taxes. Don't let the taxes wag the tail of the investment. I wonder if the dividend is not complicating things for your own brain regarding this. 2, I haven't kept up with it bad, but I know Novo and Hims have been doing a back and forth, like, are we partners? Are we not partners? Right? And have you kept up with that at all? Or are they friends?
It was like a on and off again, right? And they were suing each other, and then they were partners, and then they were suing each other again. I don't know where that is at right now.
So that could be a good follow-up too, because I guess the way that blows too will determine a lot about this investment, because if they could take advantage of the fact that they invented these drugs, and if some legal compliance is put in effect, then the story could really come back.
I know this is going to happen. I'm kind of getting ahead of my own thinking. Like I always snag our podcast episodes when they come back from the editors. I listen, and often I learn something. I know I'm going to listen to this segment, and I'm going to go, I should sell this.
And then of course the next day it's going to go up 40% because we live in a simulation, Badge. This universe is intended to teach us the things we really need to learn. No, I think we're both saying sensible things. It's hard to know, but and it is curious because I like a good value, like the next guy. I'll talk about oddity maybe in the next episode, right? That's potentially a giant value trap, but I'm certainly plowing in my bananas to that one, so I'm not scared. I'm not merely scared of an awful chart, let me put it that way. But it is curious that I have zero desire to own this. And that's, I don't know, personal, or it's curious, right? Why that, like, you don't make your case is, it makes sense. And yet, like, nope.
And that's a good signal to me, right? You are the biotech guy. You did a biotech degree initially, right? Like you got something.
As a bio major, yeah. Although that's now, I'm old, so, the biology I learned in 20 years ago is out of date. But yeah, no, I understand biology pretty well.
And I do not at all.
But, but to be fair, the reason, as we were talking about, the reason doing biotech podcasts deep dives is hard is because like there is so you end up talking about molecules, right? And it really has nothing to do with the investment case. The investment case is like a very different beast. It's contextual. It has more to do with politics and macro. You don't really need to explain pathways exactly. And yeah, you kind of have to. So it's a mixed bag.
Yeah.
I do feel like I want to wish these guys well because I feel like knowing what I know about this story, like they were the guys who did all this work, but then all these sucker fish are getting fat off of, their work. Kind of feels like a little bit unjust.
So maybe there is like a parallel here between Novo and Sphere, because like they are in the sense that like they are both in very different worlds. They're sort of good companies providing a service that the world wants more of. Like obviously completely, one is like entertainment and arguably, frivolous, and the other is actually like saving lives. But these are things that make the world a better place, right? That's a very simple framing. But then, in different ways also, they're kind of both not great investments. And so, you can love a company and hate the stock. That's not contradictory, or vice versa. You can hate a company and love the stock, and often that can be quite a dangerous situation to be in. But these are sort of two different things that ultimately kind of get to the same place. They mirror each other, but like the stock can diverge from the company's performance to, much longer decades than you expect.
Yeah, and maybe this is for its own segment, but that is actually one of the reasons I started getting more interested in mucking around corners of the investing world that I kind of don't even care about the story, but it's more about the investment case, purely the investment case, because now with this surplus of information, if it's a good story, everyone knows about it, so the price probably is reflecting the narrative. So you got to get a little craftier from this perspective in looking at pure investment case. Last thing you reminded me though, Badge, I forgot to mention that Metallica will be one of the residencies at the Sphere. How great is that show going to be?
Oh yeah, that'd be awesome. Yeah.
Oh my God, I'm not even a huge Metallica fan. That's, I know some of their big hits, but I'm not, diehard. But if you take a band with that kind of like balls to the wall, like, can you imagine what that feel like to be in that ball with them? I would totally go just to see that show.
And
you take
the Backstreet Boys also are doing like a bunch of shows there. I'd love to see that too, frankly.
Maybe we should put this out to our audience. If you're listening to this on the YouTubes or on our Patreon at, patreon.com/Wall Street Wildlife, let us know if maybe we need to do an improv trip back to Vegas to see either the Metallica or the Backstreet Boys.
Let us know which one you would be the biggest fan of, because I don't think we're going to go and see either. But let us know which one you would go see out of those two. Or Wall Street Wildlife Live. I don't know if we're big enough to fill a Sphere just yet.
Oh, that's a great idea. We should host our podcast live on the exoskeleton and fit.
We have to win some lotteries to get on the Exosphere.
Yeah, that's how you'll know we'll have made it. So anyway, in this episode, Badge, we showed a lot of charts and figures, both for Sphere and for Novo. That is courtesy from our pals over at fiscal.ai. They really help make sometimes complex situations pretty easy to see visually.
Yeah, if you want to get a healthy discount, go check out our affiliate link, fiscal.ai/wildlife. No credit card needed, 2-week free trial. Even, like I said this in the past, even if you just use the free version, it's freaking good. Like you want up your game as an investor.
Yep. You ready, Badge, to be a beast of an investor?
I am.
A reminder that the people on this program may hold positions in the companies that are mentioned. Buying and selling stock carries financial risk, which could include loss of capital. The views in this program should not be taken as personalized advice. Before acting on any of the information provided, listeners are encouraged to consult a financial or tax professional.